Cryptocurrencies have been around for over a decade now, and yet there are still many people who don't fully understand what they are, how they work, or their history. In this video, we will be taking a closer look at cryptocurrencies and exploring their history, invention, rise and fall, and their current state. We will explore the different types of cryptocurrencies, their applications, and the role they might play in the future of finance. We will also examine the impact cryptocurrencies have had on the financial industry and how they are disrupting traditional finance. In recent years, the popularity of cryptocurrencies has exploded, with more people than ever before buying and investing in them. So let's begin by understanding what cryptocurrencies are. Cryptocurrencies are digital or virtual tokens that use cryptography to secure their transactions and to control the creation of new units. They are decentralized, which means that they are not controlled by any government, company, or individual. Instead, they are maintained by a network of computers that work together to verify and process transactions. Now that we have covered the basics, let's dive into how cryptocurrency actually works. At its core, cryptocurrency is a digital asset that uses cryptography to secure its transactions and to control the creation of new units. Instead of relying on a central authority, such as a bank or government, cryptocurrency transactions are verified and recorded on a public ledger called the blockchain, which is a series of interconnected blocks that contain transaction data. There are thousands of different cryptocurrencies, but the most popular and well-known is Bitcoin. Bitcoin was invented in 2008 by an anonymous person or group of people using the pseudonym Satoshi Nakamoto. The invention of Bitcoin was a response to the 2008 financial crisis and aimed to create a decentralized currency that was not controlled by banks or governments. Bitcoin uses a proof-of-work consensus algorithm, which means that miners must solve complex mathematical equations to validate transactions and create new Bitcoins. Bitcoin transactions are pseudonymous, which means that they are not linked to a person's real identity, but they are still traceable on the blockchain. Since Bitcoin's invention, thousands of other cryptocurrencies have been created, each with their own unique features and applications. Cryptocurrencies have had a tumultuous history, with rapid price swings and high levels of volatility. In 2021, Bitcoin reached an all-time high of nearly $65,000, but then suffered a massive drop, losing more than 80% of its value over the following year. Other cryptocurrencies experienced similar volatility, with many investors losing large amounts of money. The volatility and lack of regulation in the cryptocurrency market led to calls for increased oversight and regulation. In response to these concerns, governments and financial institutions around the world began to explore the potential regulation of cryptocurrencies. Despite the challenges and setbacks, the popularity and use of cryptocurrencies have continued to grow. Today, cryptocurrencies are being used for a variety of purposes, including as a store of value, a means of payment, and a way to invest. Many businesses and individuals now accept cryptocurrencies as payment, and some governments are exploring the potential use of digital currencies as part of their monetary systems. The future of cryptocurrencies remains uncertain, but it is clear that they have already had a significant impact on the financial industry. As we continue to explore the potential of blockchain technology and cryptocurrencies, it is likely that we will see continued innovation and development in this field. One of the biggest advantages of cryptocurrency is that it allows for fast and low-cost transactions across borders. This can be incredibly beneficial for people who need to send money internationally, as traditional money transfer methods can be slow and expensive. In India, cryptocurrency is not yet recognized as legal tender, but it is not illegal either. In 2018, the RBI imposed a ban on banks dealing with cryptocurrency, which was lifted by the Supreme Court in March 2020. Since then, cryptocurrency has gained momentum in India, with more people investing in it and businesses accepting it as payment. Cryptocurrency is being used in India for a variety of purposes. Some people are investing in it as a long-term investment, hoping to see its value rise over time. Others are using it for international transactions or to pay for goods and services online. Cryptocurrency is also being used to support charitable causes and for peer-to-peer transactions. Despite its growing popularity, cryptocurrency still faces some challenges in India. One of the main challenges is lack of regulation, which has led to concerns around fraud and scams. Another challenge is a lack of understanding among the general public about how cryptocurrency works. Another challenge that cryptocurrency faces in India is the lack of infrastructure to support its adoption. Unlike traditional payment systems, cryptocurrency transactions require a high level of technical knowledge and infrastructure to execute. This lack of infrastructure is particularly challenging in rural areas where access to technology and internet connectivity can be limited. Moreover, the tax implications of cryptocurrency in India are still not entirely clear. The Income Tax Department has stated that profits made from cryptocurrency trading are subject to taxation, but there is no clear guidance on how to calculate these taxes. This lack of clarity creates uncertainty for investors and businesses who want to use cryptocurrency in India. Furthermore, there are concerns about the environmental impact of cryptocurrency mining. Bitcoin, the most popular cryptocurrency, uses a significant amount of energy to mine, which has led to concerns about its carbon footprint. The energy-intensive nature of cryptocurrency mining also raises concerns about its long-term sustainability. While the lifting of the RBI ban on cryptocurrency has allowed for more widespread adoption, there is still a lack of support from traditional financial institutions in India. Many banks are still hesitant to offer cryptocurrency-related services, which can make it difficult for individuals and businesses to transact using cryptocurrency. Cryptocurrencies have come a long way since the invention of Bitcoin in 2008. They are decentralized digital assets that use cryptography to secure transactions and control the creation of new units. Despite the challenges and volatility, cryptocurrencies continue to grow in popularity and are being used for a variety of purposes. However, there are still challenges that need to be addressed, such as lack of regulation, infrastructure, and understanding, as well as environmental concerns. In India, cryptocurrency is not yet recognized as legal tender, but it is not illegal either. While the lifting of the RBI ban on cryptocurrency has led to increased adoption, so whether you are an investor, a business owner, or just curious about the world of cryptocurrencies, there has never been a more exciting time to explore this revolutionary technology. We will keep you updated. Subscribe to Gurgaon Mail and stay tuned.